Focus on some earnings as well. The first company on our radar this morning is CG Power. The company's growth in the first quarter seemed quite healthy. Order inflow was quite strong. Margins came under a little bit of pressure. In fact, the top line grew by about 29%. But if you see the EBITDA margins, then from a level of 14.7%, EBITDA margins came down to about 13.2%. So let's understand what's been happening and what the outlook is for the rest of the year. We have with us Amar Kaul, Managing Director and CEO at CG Power, joining in. Amar, great to have you on. Morning. So let's just start by understanding the top-line growth. How much of that is your base business, the organic revenue itself, and how much came in through the recent acquisition that you made?
Sorry, there's a voice issue. Can you repeat your question?
Yeah. I was just asking that this top-line growth of 29%, how much is it organic, the ongoing base business, and how much came in from your recent acquisition, right? Axiro.
Yeah.
The acquisition that you just made.
Okay, that's fair.
If you just split that, talk about Axiro scale up and give us a view on the growth on the base business itself, what you're seeing this year.
Sure. So if you look at, 29% you talked about the top line growth, that is the consolidated basis. So our standalone business is at 25% growth with a PAT growth of 23%. So which is in sync with the way we are seeing the growth. And if I look at consolidated level, which is acquisition of Axiro, that has already been completed, and I think this will be the transition year. They already started getting the revenue, but yes, when you acquire a company, the first year will be the transition mode, and then it starts going up.
Yeah. So if you could give us a sense of scale, and that's very impressive. The base business itself grew at 25%, so we've noted that. Now talk to us about the scale up in Axiro. In FY26, how much will it add to your top line? And in FY27, when it's fully integrated with your operations, then what can we expect? And so then total growth going into FY27, what should we work with?
So we would expect Axiro to be at about 400 crores approximately to bring in this financial year, and keep building on the same.
At what growth rate? Amar, good morning. Prashant here. What rate of growth?
It's basically, we just acquired the company. So I would say it'll be a bit shade above what was done in, it was with Renaissance last year. So it'll be a shade above that.
Which is, if you can give us a number.
It's the shade.
Amar, at what, roughly, I mean, I'm not looking for specifics here, but just, over 400 crores, what's 27 going to look like and after that?
So long term, as you know, we don't give forward-looking statements in terms of the growth numbers, but I would say even the growth will be a double-digit growth to start.
Okay, double-digit.
The aspirations are huge there.
Okay, Amar, just one question on the OSAT, and we've spoken about this in the past as well, right? That has come online. It's showing up in your revenues. It's showing up in the bottom line as well, although in a negative way. Could you talk to us about where that stands now in terms of starting up and when will that business break even? Because it is taking a little bit out of your net numbers right now, but of course that's a matter of time.
Yeah, no, fair point. And as you know, semiconductor, India had no access to it, so it's a long-term investment. That's why it's a strategic investment. But the good news is, I think what we have been able to brought into the country is the technology of OSAT. The second good news is also that the project is ahead of the target. So hopefully in this quarter itself, we should be soon announcing the inauguration of the first facility, which we call the mini facility. And then it takes about 9-10 months approximately for approval and making sure that it gets commercialized. And FY27 will be the main plant, which is the larger one. So both the projects are going exactly in sync with what we had planned for.
All right. Hi, Amar. Good morning. Good to see you, Ben. You're sitting on a solid order book of around 13,000 crores. For the year, what kind of ballpark revenue growth can you deliver in comparison to last year? If you could help us out with the broad range. And also, what about margins? Power systems, the margins are very, very encouraging. Can those margins sustain? And do you expect the industrial systems margins to improve now that, there are some kind of price increases that could come about? There'll be execution of coverage orders as well. So what is the margin improvement we are penciling in from here on?
Yeah, hi, Nigel. Fair point. So two things from the order book that we have, which is pretty healthy. So we'll continue the growth momentum that we have. As I'm saying, with the growth that we are seeing, we will continue that momentum. And
Amar, we have lost you, Amar.
The audio dipped.
The audio dipped, yeah.
Can you hear me?
Yes, you're back.
Yeah.
Please go
Okay.
ahead.
So I was saying